Hello, welcome to Accounting 2010 Chapter 7 videos. In the second video, we are going to be talking about a bank reconciliation. Now, bank reconciliations are a process of which we can compare what is in our books to what is in our bank account. And today, with the advent of electronic banking and the ability to see our bank accounts at any given time and what is happening in our bank accounts, we don't perform a bank reconciliation in our day-to-day life as often as we used to in the past, when we only would receive a bank statement once a month. And we would use this opportunity to reconcile what had come in and out of our bank with what was happening in our books. In business, with all of the transactions, we still perform bank reconciliations much more frequently than we do in our personal accounts. So it's important as a part of Accounting 2010 to know how to perform a bank reconciliation. This will allow us to have another internal control over that important cash account. So in order to perform a bank reconciliation, I have set up a Roadrunner's Roost example. And the first side, on the left side, you will see that we have a check register of Roadrunner's Roost. And on the right side, we have a bank statement from the MSU Denver Credit Union. And in order to perform the bank reconciliation, we're going to want to know what has that we those activities, those transactions that we have recorded in our check register, how does that compare to what has been processed in the bank account? So I have color coded for the Roadrunner's Roost. Yellow means that these transactions we've recorded in our books have actually cleared what has happened in the bank statement. So I color coded it yellow to show that what we recorded as a withdrawal or as a deposit has also been reflected in the same manner in the bank statement. The blue coding are those transactions that we've recorded in our books that have not cleared the bank statement as of the day the bank statement was issued. Also, if you'll notice in the bank statement, there are transactions that are keyed with letters or types of um, withdrawals and deposits that are not yet recorded in our books. They've gone through the bank but are not recorded in our books. So what are they? The first is a BC, or a bank collection. And sometimes the bank will collect payments from us in our accounts receivable. We can have it set up where those payments are collected automatically by the bank. Another thing that can happen, and you may have this in your own bank account, electronic fund transfers, EFTs. Perhaps your paycheck is deposited by your employer every 2 weeks, once a week, once a month. And we call that an electronic funds transfer, where we are set up to receive payments in an electronic funds transfer. Another type of transaction that can occur in businesses as well as our own life is we can have electronic fund transfers for payments. Maybe you have your power bill, your phone bill, your rent is automatically deducted from your account every month in an electronic funds transfer. This can also happen in businesses. Another type of transaction that can occur are NSF. NSF stands for non-sufficient funds. There were not sufficient funds in the account of whomever gave us a check to cover the check, and so that check bounced. We had added it into our bank account, or excuse me, our check register, that it had cleared, and then we got notice that it had not. We're going to have to take it back out of our books. Another type of thing that can happen is banks can either give us interest or they can remove interest. In this case, perhaps we had to pay some interest for something on an account. The bank removed it from our account. Another type of transaction would be SC, or service charge. The bank can cause a service charge for just the pure beauty of us having an account with them, or to process checks, or to charge us if we had bounced a check. Lots of things can come up as service charges. Perhaps you've encountered these in your bank account. So once we've actually compared what has gone on in our books compared to what has gone on into the through our bank account, we can prepare our bank reconciliation. And there's actually a very nice process. You receive these in your slides of how to do that. So we want to start with the bank side first, and we want to say, what do we know and the bank does not? So there's a multi-step process. We'll go over to the bank side. We're going to start with the ending bank balance, what the bank believes that we have in the account. We get that off the bank statement. They believe we have $11,467, but they don't know that some things are happening that we know. What are those things? Well, we've made some deposits that haven't cleared the bank account, and we've written some checks that have not cleared the bank account. So we're going to go and add those deposits to the ending bank balance. We're going to subtract out those checks which have not cleared from the bank yet. And if there were any errors that the bank had made that we have it written down as a different amount and they've actually made the error, this does not happen very often. If you have a test question or a homework question more often, make note, more often, it's going to be that we made errors. But if the bank made an error, we would adjust it at the end, and that would give us the adjusted bank balance. So to reiterate, we start with the ending balance that the bank believes it has, that we have. We're going to add any deposits that the bank has not seen to the bank ending balance. We'll subtract out any checks that the bank doesn't know we've written, and that will give us the adjusted bank balance. Step 2 is going to reconcile the book side. And so this is where we did not know that the bank had collected money or that the bank had charged us money, and we're going to have to add and subtract that in. So we're going to start with our ending book balance, and your problems and your tests will generally give you this, your ending book balance. That's your beginning number. You're going to add in any collections the bank has made on our behalf. In the case of Roadrunners Roost, the bank had collected an accounts receivable from a student and had an electronic funds of $700. We're going to add those amounts in because we did not know this has happened. We're going to subtract out anything that the bank has taken out that we did not know about. So in the case of Roadrunners Roost, the bank had taken out our rent payment. The bank had taken out a non-sufficient funds check that had originally looked like it was going to go in. It's going to take out interest that it's collecting from us, and it's going to take out the service charge. So there we've got that electronic funds transfer for rent, the non-sufficient funds, the interest, the service charge. We're going to subtract $1,340. So we start with our ending book balance, add in any deposits collected, subtract out any amounts that the bank has taken away. That will give us our adjusted book balance. And just like our other equations, the left is equaling the right. The bank adjusted balance is equaling the book adjusted balance. And then we know that we have an adjusted and correct book balance that accounts for everything that the bank doesn't see, everything that we don't see that the bank does. Again, the other note is if we've made an error and we realize that we have recorded a check incorrectly or a deposit incorrectly, we would want to do that as the last step in the adjusted book balance process. You will see this in your homework. You will see this on an exam. Make sure you understand this. And that concludes Chapter 7, the petty cash, bank reconciliations, and the chapter on the cash account.